Now that we've learned about zoning and about trends, we will begin combining the two. In this lesson, we'll give an overview of the strategy for finding a zone within a trend. What we ultimately want to think about is how to find the correct formation in the correct location. In other words, we want to locate the right basing candles in the right place. Finding a zone within the right location within the trend sets us up with a higher probability of opportunity. Reason being is that we are looking to time the turning point price in the markets. Now, one element that turns price is a supply or demand zone, where there is a big imbalance between buyers and sellers and unfilled orders get left behind. Another element is the trend because it provides an anticipated turning point. So, for example, a downtrend is made of lower highs and lower lows. So price is therefore expected to turn at a lower point than the previous high. But the expectation of where price is likely to turn from a trend perspective and combining that with a quality zone, this not only provides us with a low risk entry point, but also increases the probability of price turning at the zone. The trend will always indicate the direction of the large flow of money within the markets. It is the path of least resistance, so to speak. In this way, the trend direction indicates whether to go long or to go short. If we identify an uptrend, this shows us that institutions are buying and paving the way for prices to move higher. So in this case, we look for buying opportunities, or in other words, we look for demand zones. If we identify a downtrend, this shows the opposite. It shows us that institutions are selling. And in that case, we look for supply zones to go short, joining the downward movement of price. In a sideways trend, there is opportunity in both directions. Within a sideways ranging market is showing us that price is stopping and changing directions at the highs and then changing directions again at the lows, and vice versa. So in this case, we look for supply zones to sell short near the highs, and we look for demand zones to buy long near the lows. The key point is that trends tend to continue. We are in the business of buying low and selling high. This is not just another catchphrase. We do that by being right regarding the direction of price, or in other words, regarding the trend. The direction in play is whatever the current trend is in. Therefore, the highest probability of a successful opportunity is to join the market by placing an order consistent with the trend direction. Proper trend identification not only indicates which type of zone to look for, but it also shows where to look for that zone. In other words, it shows the location within the trend to look for an entry zone within the breakout segment of the current trend. This simplifies our process and keeps things efficient. If all we had to do was find a zone and we had no anchoring point from the trend, we could end up with 5, 10, or 20 or more zones, and we could also end up with what is referred to as analysis paralysis, where choosing between so many options becomes a problem because it's difficult to know which one is the right zone. By narrowing our focus to looking only within the breakout segment to find our entry, not only eliminates the guessing game, but it increases the odds of getting our order filled and increases the probability of the trade moving in our favor by joining the market within the current trend. Recall the breakout segment is always attached to the controlling swing, and the controlling swing price point will determine whether a trend is still valid or whether the trend has been discontinued. So in this lesson, We've previewed the strategy for combining trend and zone. Next, we'll get into the specific details for finding an entry zone within each trend, whether the trend is up, down, or sideways. Before you move on, after you've identified the trend, begin looking for supply and demand zones within the trend's breakout segment. In an uptrend, look for demand zones, and in a downtrend, look for supply zones. In a sideways trend, look for both demand and supply zones. Hope to see you in the next video.